in relation to the election, I think immediately after the election, people were quite pleased that regardless of your sympathies in Labour versus Conservatives, the fact that it was a strong government with majority was a relief, because people were worried that you were going to get what's referred to as a hung government, which basically you have a minority government possibly. But that sort of relief lasted a couple of weeks until the discussion around the EU exit took off, and I think the benefits, any benefits from the new government on the commercial real estate side, from the Tories having won the election outright, is the discussions around the EU vote now is more than making people more concerned than the benefit from the Conservatives having won. I think the only benefit, really the clear benefit, has been the residential market, where the Labour Party were discussing introducing quite penalising taxes and things, which is now off the table.
We saw in our Edinburgh office a slowdown after or just before the Scottish referendum as to whether to be part of the UK or to go on their own. And there was a month or two when it was very noticeable in terms of volume and activity. There wasn't much happening, which was then more than made up with when the yes voters staying part, yes, depending on if, or no not to go on their own, yes to stay within the union. And I think we've probably seen a similar thing in the UK, that there was lots of talk, but in terms of looking back, there hasn't been much noticeable difference in terms of activity post the election. I think the EU referendum is obviously a bigger geopolitical picture, but as Martin was talking about low rates of return is another way of saying popularity, and London remains a popular market. I mean, the first quarter of 2015, the overall investment, I think, is $38 billion into the UK, into the London market, which is as much as the entire German market. So London still remains, and will remain, regardless of any EU referendum, a popular place for investment. It has a unique position of having sufficient stock. It's a transparent market. It's a liquid market. And those three criteria cannot be found in many places. I've got UK pension fund clients, for example, who would like to invest in the regions, the UK regions. So you look at Leeds, and if you want to invest between 25 and 40 million pounds in Leeds offices, you've got a choice of 4 buildings, one of which is the DLA Leeds office. So the ability to have a wide and diverse liquid market will remain in London regardless of any EU referendum.